is who has to do this digital sign? Is it only the RE or is it the borrower as well? So the directions themselves do not spell this out fully. All they say is digitally signed documents must flow to the borrower upon execution of the loan contract, right? This gives rise to two interpretations. The first one, what we call the compliance first approach. So here, the execution of the loan contract is fundamentally a transaction between the RE and the borrower. And the compliance first approach sees this and views the phrase digitally signed documents that is mentioned in the DLD as applying to both parties to the execution, right? The RE and the borrower or multiple borrowers. So in the compliance first approach, the RE digitally signs, usually via an automated doc signer. That's why they put doc signer here. And then the borrower also digitally signs, usually via an Aadhaar eSign. Here, both are signing via an IT Act digital signature here, right? So in our experience, most banks and compliance focused REs use this approach. They anyway do it for branch-based lending and they extend it to their digital lending app flows as well. The other interpretation on the right is what we call the liberal approach, where only the RE signature is affixed via a digital signature like a doc signer. And for the borrower sign, a non-digital sign mode of electronic authentication is used, say a click wrap or an OTP-based virtual signature. The liberal approach fundamentally relies on your compliance team and how they read digitally signed documents in the DLD, how they actually read it, right? Do they read it to mean that only the RE must sign and not the other party to the loan documents, which is the borrower? Or do they read it to mean like digitally signed documents mean both parties to the document or all parties to the document have to digitally sign? A question we receive when we actually explain this is which one does legality recommend? We are not going to weigh in here because we can't provide clarity that the rules do not provide. Ultimately, the choice remains with the compliance team, right? Because the compliance first approach ultimately is definitely something we can say unambiguously is compliant because there's a digital signature at every stage. The liberal approach is not something we can explicitly recommend. It ultimately relies on an opinion by your compliance team because there is an element of non-digital signature by one of the parties. So that's the first part of requirement 3 done, where execution of loan contract happens via IT Act eSign. We've listed the IT Act eSigns here and by the RE and borrower, of course, depending